Stocks on Wall Street closed the session lower. Dow snaps the three-day winning streak as excitement over strong jobs report fizzles out. The economy added 130,000 jobs in January, blowing far past the consensus expectation, and the unemployment rate dipped to 4.3% from 4.4% in December. Markets in Asia open mixed as investors digest a slew of economic data. Japanese stocks extend post-election rally. Nikkei breaches the 58,000 mark for the first time ever. GIFT Nifty indicating a muted start for the Indian market. Crude prices extend gains from the previous session and hover near 5-month high as markets remain focused on US-Iran tensions. Meanwhile, gold gains over 1% as buyers shrug off strong US job data, safe haven demand amid US-Iran tensions, and pushed up prices. In key earnings, HUL is expected to report a low single-digit volume growth in Q3. Revenue seen 4% higher from a year ago. Hindalco is expected to report flattish volumes in Q3. Copper EBITDA, however, likely to remain stable. Watch out for numbers from ONGC as well as Coal India as well. India's new CPI series debuts today. Government set to release January's inflation data with FY24 as the base year. CNBC TV 18 poll sees headline inflation at 2.89% and food inflation at minus 0.08%. Hello, good morning. You've tuned into Power Breakfast on CNBC TV 18. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. We had an amazing job data that came in from the US markets. We saw them run up and then see a bit of a correction. So they fell off again and closed in the red, a bit of them. Apart from that, Asian markets, how have they opened? Bit of a mixed indication. Taiwan index holding on to strong gains, 1.6%. On the flip side, look at Hang Seng. That's down 0.7% in trade. Nikkei is trading very muted today. It was in the green. Now it's come back in the red. 0.04% decline as of now. So very flat over there as well. It did touch that 58,000 mark, and then it came off from those high levels. Shanghai, too, is trading with cuts of 0.2%, while ASX 200 is managing to hold on to a gain. So very, very mixed opening is what we're seeing. Let's look at the Nifty implied open for the Indian market. It seems like a muted start is what we're watching out for today. So that is what we're tracking today. But a lot of overnight cues have come in. How is this going to be impacting our Indian markets? We have a team of research joining us to set you up for trade, tell you which are the important stocks to watch out for in the trading session as well. First up, let's go across to Ekta, who's here to tell us the important cues that we are keeping an eye out on in the markets today. Good morning, Ekta.
Morning, Vinny. Well, yes, yesterday, in fact, the markets did consolidate in yesterday's trading session. There was some amount of resistance which is being faced at 26,000 for the Nifty. So that would be a key level to watch out for technically. Now, the FIIs continue to net buy, and we've seen that in patches. So they have bought around 50% of the past few sessions. So that is definitely a positive. And they bought around 943 odd crores. Remember, in the previous session, it was around 69 odd crores. So there has been an incremental increase which has come through for the FII. So that should bode well in terms of sentiment for the equities as well as for the rupee. The DIIs net sold around 125 odd crores. Now, like you mentioned, the US markets ticked lower in yesterday's trading session. We had the Jan non-farm payrolls data, however, which was better than expectations. And we do have the CPI data on Friday for the US markets, which will be watched out for closely. Asia is trading mostly higher at this point in time, but interestingly, do watch out for a couple of the IT stocks and how they perform, considering the ADRs of Infosys and Wipro have been lower. In terms of result reactions, we have Hindalco, Lenskart, Max Financial, to name a few, that will be reporting numbers today. And in terms of results today, we do have a couple of heavyweights, so HUL, HAL, which will be reporting numbers, Coal India, ONGC, Bharat Forge, Biocon, Lupin, all of these companies which will be reporting numbers. The finance minister is going to be responding to budget discussions in the Rajya Sabha, so that will be something to watch out for in terms of any incremental information. And we do have the CPI data at 4 p.m. today.
Okay. Thank you so much for that, Ekta. But let's move on and talk about important stocks that you should be keeping on your radar. Ria is here to take us through that. Good morning, Ria.
Well, good morning. Let's take a look at the stocks that will be in focus today. The first one is Netweb Technologies. Sources say that promoters are likely to sell up to 3% stake in the company via block deals. The offer size will be roughly 515 crores and the floor price is set at rupees 3,027 per share, which is a discount of roughly 4% to the last closing price. Hindalco will also be in focus today on the back of Novelis results. The quarter has been marred by the fires that took place in Oswego in last year and also by higher tariffs, and the pain in Novelis operations is likely to continue into the second quarter of calendar year 26, and the total free cash flow impact before insurance will be roughly $1.3 to $1.6 billion for them. Moving on to some stocks that will be in focus on the back of their quarter 3 results. LG Electronics is the first one. The net profit has gone down by almost 62% compared to the previous year, and EBITDA margins have also taken a hit at just 4.8% versus 7.8% in quarter 3 of last year. Jupiter Wagons as well has reported quite a weak set of numbers. Net profit going down by roughly 35% for the company. Even the revenue has seen a decline of roughly 13.5% on a year-on-year basis. For Godrej Industries, the revenue has seen an increase of almost 5% compared to last year. Margins, although, have come down to 10.8% versus 12.4% in Q3 of last year. For Amara Raja, the net profit has declined by 53%, although the revenue has seen an increase of roughly 4.2% compared to the previous year. For Ircon as well, revenue has seen a decline of roughly 19% on a year-on-year basis, and margins have come in at 7.5% versus 5% in Q3 of last year.
Okay, Ria, thank you so much for that. But finally, we have Sudarshan, who's here to take us through the important cues in the world of F&O. Good morning, Sudarshan.
Good morning, Vinny. So, as we have been talking about, that 26,000 has become very important level for Nifty. Consecutively for 2 straight days, we have seen that after hitting 26,000, Nifty has fallen below that level. So for today also, 26,000 will remain the important support. As far as the put-call ratio for Nifty is concerned, yesterday we have seen it slipping to 1.06 versus earlier level of 1.20. That indicates you that still we are seeing more addition on the put side than the call side. In the index futures, FIs continue to be on the buy side. Yesterday was also they have bought more than 240 crore. In the stock futures, well, they were sellers. They have sold more than rupees 760 crore, and longs position remain around 22%. They have added long position of more than 1,300 contracts, and on the short side, exposure is 78%. In the options data, as I have told you, 25,900 and 26,000 put options have seen maximum increase in the open interest, and on the call side, 26,000 and 26,150 were the most active call options. So support for Nifty remains around 50 DMA, that is 25,790. Resistance remains around 26,000. 2 stocks remain in the bench, sale in Sammaan Capital. I'll keep an eye on 2 stocks. Divi's has been seeing short covering after the results. Even commentary was positive. TCS, keep an eye on the stock is at 52-week low, and all the IT stocks when ADR were under pressure. So TCS has been seeing fresh shorts.
Okay, Sudarshan, thank you so much for that. But let's move on, and the government will release the January inflation fine print today as per its new series. The base year has been seen as FY24. Lata is here to explain what the street is expecting according to the old series and the new series. Lata?
Yes, that's right. The long-awaited new series CPI is going to be announced for Jan 2026 on February 12th. And what do we know about the new series? The MOSPI, the Ministry of Statistics, has revealed what will be the weights for the various items in the CPI basket as per the new series. And from those weights, what we come to know is the weightage of food has come down from about 45.86 to 36.75, a good 9 percentage points lower. And non-food, non-fuel has gone up from about 45% to about 55%. This is obviously because the Indian family, the household has evolved. It's become richer. It is spending less on food and more on non-food items because people have gotten richer. Okay, now what will we get for January? If you take the old series, about which everyone is sure, new series is mostly guesswork, the old series says that the January inflation will come in at 2.36% compared to just about 1.3 in December, and compared to 4.26 year ago January. So over 4.26, you have 2.36. But if you look at the new series, the inflation is a good half a percentage point more at 2.89, almost 3%. Food, both of them see it as negative in the old series and the new series. Core inflation also will be high because the base is getting lower. against a base of 3.67% year ago, that is January of 2025. January 2026 will be 4.7% according to the new series and nearly 4.9% according to the new series. Okay, old series is 4.7. Short point, we are going to get a jump over 2% in inflation, maybe 3% if it is the old, but in the new series it is almost close to 3%, 2.89.
Okay, Lata, thank you so much for that. But let's step into a very short break. Up next, we'll get you cues from Wall Street. Stay tuned in. Thanks for staying tuned into Power Breakfast on CNBC TV 18. Let's talk about the jobs growth, which unexpectedly accelerated in the US market in January, while the unemployment rate eased, signaling labor market stability that could encourage Federal Reserve to leave rates unchanged in the near term. Here's CNBC's Steve Leisman, who's here to give us an update and detail in terms of the January data.
Big beat on the January U.S. payroll report, holding out hope that the job market could be turning around, but raising questions about how much faith markets should put into this one strong number. At 130,000, it was more than double the expectations. The unemployment rate fell to 4.3%. It had been expected to remain the same. Participation rate, it also rose. Labor slack declined, and there was a stronger private sector compared to the full report. But among the questions raised on the jobs report, it was triple the prior 2 months, and there were big seasonal adjustments helping out retail, for example, and possibly some weather effects with actually above normal temperatures in the first half of January helping construction. That was before things turned bitterly cold. There was also concentrated job growth in healthcare, but some gains in manufacturing. Meanwhile, there were huge downward revisions as expected. In 2024, the U.S. created 1.5 million jobs. Before the revisions, we thought it was around 500,000. Now it's been revised down to just 181,000 jobs created in 2025. On a per-month basis, that brings it down from 49,000 to just 15,000 a month in 2025. Futures prices continue to price in 2 rate cuts, one in June, another one by the Fed in October or December. It had been flirting with higher probabilities on possibly earlier cuts, but that's been washed out by the stronger jobs number. At the very least, this number confirms the Fed take that the job market has stabilized, but confirmation that the U.S. is off to a new spurt of strong payroll gains will have to await a less noisy month for confirmation.
And in the US market, Wall Street ended mixed on Wednesday, with Dow Jones snapping a 3-day winning streak after the better-than-expected January jobs report failed to spark a sustainable advance. The S&P 500 inched lower, while Nasdaq dropped 0.16% in trade. Now, here is what Jan Hatzius, the chief economist at Goldman Sachs, had to say about the US economy and Fed's interest rate outlook following the strong jobs data.
I think the economy is doing well in general, so it's not, I think, crying out for cuts at this point in time. I think what we're going to see is probably more a return to a neutral rate once the committee as a whole is confident. I'm a skeptic that the neutral rate is all that useful because the range of estimates is just so big. But the committee has an estimate, and that's 3%, and we're still 50 to 75 basis points above that.
Now, let's move on and get to the latest update on Trump-related developments and his commentary overnight. Now, President Donald Trump, in a Truth Social post, welcomed the better-than-expected jobs growth on Wednesday and pressed his view that U.S. should pay much less in borrowing costs. Moving on to the next commentary, President Trump also met with the Israeli Prime Minister Netanyahu and his team, and in a Truth Social post, he gave the details about what he spoke about, what they spoke about. He said it's a very good meeting that underscores the strong US-Israel relation, and he said no firm agreements were reached at as of yet, but he pushed for continued negotiations with Iran towards a possible deal. Now, if talks fail, he also highlighted that if these talks fail, the outcome remains unclear, and he referred to a past US strike that hurt Iran after they rejected the deal, and hopes for a more reasonable response this time around. Trump also highlighted in that post that there were major progresses in Gaza and the border region, declaring true peace in the West Asia. In another commentary that came in, Trump threatened consequences come election time for Republican lawmakers who oppose his administration's tariff on U.S. trading partners. And in a post on Truth Social, he said any Republican in the House or the Senate that voted against the tariff would seriously suffer consequences come the election time. This came in shortly after 6 House Republicans voted against President Trump's tariff on Canada. Now, in the last commentary that we have, the US and China are expected to extend the trade truce negotiated in South Korea by up to a year, when President Donald Trump will be visiting President Xi Jinping and meeting him in Beijing in yet to be finalized date in April. So this is a report that was suggested by South China Morning Post. We'll keep you more updated on this front, but as of now, this is the latest update that we have here. Okay, on that note, we're going to step into a very short break. We'll come back with more on commodities on the other side. Welcome back to Power Breakfast on CNBC TV 18. Now let's go across to Manisha, who's here to give us the latest update on what's happening in the world of commodities this morning. Good morning, Manisha.
Morning, Vinny. Thank you so much for that. I'll start with the precious metal prices because we've seen a bit of a trimming on both of these. The major reason clearly is the stronger than expected U.S. jobs data. The U.S. employment rose highest in an year for the month of January. The U.S. unemployment rate fell 4.3%. So with this kind of data, it tells you that the jobs market is resilient. And the markets are now looking at the Fed rate cut timing moving forward to July, perhaps from June, and that's weighing onto the markets here. Having said that, it is a strong central bank demand buying that we've seen in case of gold. For silver as well, the strong investment demand continues to support markets. But it really is the base metal prices which have come back quite strongly. Copper continues to maintain gains. While the economic activity in China seems to be getting better, it also is about supply disruptions and robust global demand quite supportive. LME zinc is now trading near 3-year highs. This is after markets believe that the refined zinc production was on track to decline 2% last year and could further decline in 2026 as well. Strong gains is what we are looking at in nickel, rubber, multi-year highs for many of these commodities.
Okay, Manisha, thank you so much for that. But let's move on and get the recent updates coming in from Bangladesh, because Bangladesh is heading to the polls today. And after the 2024 ouster of long-time Premier Sheikh Hasina, which was driven by a Gen Z uprising. The contest is between two coalitions, the Bangladesh Nationalist Party and the Islamist Jamaat-e-Islami. Opinion polls give an edge to BNP. Now, Hasina Awami League is still banned and she remains in self-imposed exile in India. Okay, with that, we're absolutely out of time with this edition of Power Breakfast. Thank you so much for tuning in. Up next, your Bazaar Morning Call.